All right, let's take a look at what happened so far in terms of the York freehold market. So when we come in here and we're looking now at a month-over-month basis, we still saw sliding prices, median prices being down 5.4% month over month. This is now going from October to November. That's the slide we're seeing. Transaction volume dropped by 21.5%. New listings came down 30%. So that should hopefully help our months of inventory a little bit. But with transaction volume falling so much, we'll see how that really plays out. Our median days on market hovering around that 8.7%. We went up 2 days from 23 to 25. Not unsurprising with that transaction volume falling down. Termination volume dropping down quite a bit. So that's a good sign that people are kind of finding the price points that they should be sitting at, and they're holding in that moment. Now, when we take a look at year over year, we're seeing that 8.9% decrease now in median price. This is freeholds in York region that we're talking about. And we're seeing that same 21% decrease in transaction volume. Terminations, days on market, a little less relevant in terms of our year over year stat for now. But what I want people to take note of for those that are in the market is you still felt that downward pressure on pricing on a month over month basis. So it's so critical, realtors, that you get your pricing right at the beginning, because now your homeowner's home is worth less this month than it was last month. And if you couldn't get them to see the pricing that they needed to sell at that time, they took a deeper hit. So while it is painful sometimes to go with the price that is needed right now to sell, it's more painful if you get it wrong and try a higher price and then sell the following month with that continued downward pressure that we're seeing. Now, as we roll into the chart, what's important here for you guys to see is we're showing, dating back to 2011, the new listing inventory fluctuations on a month-over-month basis. Looking at new listings, seasonality, we're right where we should be, kind of bang on in the mix with everybody else where we see new listings. Still a little higher than what you'd expect the big bulk of this to be, but not that bad in comparison to peaking out. Now, when we take a look at our active listings, here we are. We're the second highest we've seen for a month of November. The only higher time we saw was in 2017.
Oh, 17, sorry, yes.
We're just cusping. We're rubbing against 2018 right now. We're up just by a couple hundred or 100 units there.
2017 is actually invisible because of its color, but we're actually below the 2017 numbers.
Yeah, right there. Because they did 3,658 new listings in the month of November, where we're coming in now at 3,424. Again, we're talking about York freeholds. And Matt, what's been so interesting about this sales line, because we've talked it, every month this year, how it's just kind of maintained. We never saw a spring push. We never saw a fall push. It's just been maintaining. What I think we're seeing when we look at this is those are the people that are moving because of life, and life doesn't care what's going on with interest rates. Life doesn't care what's going on in the market. You're going to move, right? And so I think that's just in York region, hovering around that 600 units. That's just the people that are going to move kind of no matter what on a monthly basis.
And listen, if you're selling a home to buy another home, you're in a sideways market. You're okay. Prices may be down on the house that you're in now, but the price of the property that you're going to buy is down as well. So for a lot of people, you're making a sideways transaction when as long as you're in somewhat of the same area location, depending on where you might potentially move to, there might be some upside or downside, but just to keep that in mind for people that want to make a move, want to make a change. Just because prices are down doesn't mean that it's not a good time to do it.
Exactly. The move up buy in the down market is a great move to be making, because you will net out positive in the end. Now, as we talk about median price here, we have solidly dropped below that 2021 line. We're just above 2020 in comparison to where we were this time in 2020. It was 1,118,000 for the median price. We're currently sitting 80K above that at 1,198 in terms of median price as we look across all home types for freehold in York region. So what's important here, as we talked about with Matt, is when we take a look at the bond market and we take a look at our fixed rates, we're now coming into a time where a refinance might be happening, and the equity isn't there. We were actually below what we paid in those years. If you purchased below 2021 or prior to 2021, not going to be the same concern. But anybody 2021 and beyond, this is a concern and a challenge they may be facing. And when we take a look at our months of inventory, climbing steady since 2024, a couple seasonal adjustments, but we're over 5 months worth of inventory currently at 5.38 in terms of the freehold homes that are on the market in York region.
This is an important chart for me. We typically see these big drawdowns, and they're always typically at the end of the year, November, December, January, maybe. We're in November now, and we're working our way upwards, not downwards. So I'm very intrigued to see for when it comes January 1st, how much the month of inventory dropped over the December period, because I have a little bit of a suspicion that a lot of people aren't going to take their properties off the market over the holiday period. They're going to keep them up there. And what type of influx of more properties are we going to see January, February, March? I really think that this chart's going to have to go a lot higher into the potentially 6 or 7 months.
Matt, I'm glad you brought that up, because I have had this conversation with a few agents as well, and just know from our own team, if it is an owner-occupied home right now, a lot of those people, I think, are still going to take their homes off the market. At least in my bubble at the moment, agents I've talked to, signing a couple cancellations, will be coming back on in January. I just don't want to be interrupted over the holidays. It's been stressful enough. But if you have a investor property or a home that is currently vacant because they've moved out, they bought something else, whatever that may look like, those guys, this is that time of year where I think it makes more sense to keep it on the market if you can, and pick up those guys that might just be doing a little holiday shopping in real estate, because it does happen. It's not as big of a volume, but I think that it still makes sense to be doing that, because if you can even subtract a few of those family homes that want to be off the market for the holidays, it gives you a little bit more time to shine and be seen. Even if a buyer doesn't make the purchase right then, it's your chance to be seen through the field of other people. So that's just something that I wanted to share with everybody, because I think that there are agents that are asking themselves that. There are homeowners that are asking themselves that. And if you can stay, just like what you were saying at the beginning, you're going to probably see more people stay on. If you can stay on while some others come off, I think that's more important now than relisting in January, when we have a strong suspicion we're going to see that big influx again, because we've seen the inventory the last 2 years stay higher than what we'd seen previously. What do you think about all that?
Listen, I bought a investment property on December 24th, so I can't disagree with what you said there. That's for sure.
Exactly. You know, we've been tracking these charts a long time. You and I've been doing this over 2 years now, and we separately, before we realized that we were both watching the market this way, we had been tracking our own data. And I remember showing clients every time I show them the seasonality of average price. Now, before this market, it was very predictable. Average price would drop in the months of July and August, and again in December and January. And I look back on when we've purchased our homes, my wife and I, we purchased one in August and we purchased another one in December. And we did very well on both of those buys. But it's funny that just having watched those trends for so long, we innately were looking during that time to make the purchase. And it's amazing to hear you share the same story, that with everything that we're watching the data, we ended up buying our homes, our investment properties at the same time, because we know that we see those dips.
Yeah. As an investor, you shouldn't be lining up to get into a bidding war in March, April, May. Your opportunities are typically in the summertime and November, December, January to find properties that, typically when you're looking at investment, the seller might be pretty motivated to move on from it. And you can find some great deals during that time.
I promise you right now, everyone, there are some motivated sellers out there that will probably take a price that you're not thinking they would take right now. A fantastic time to pick something up.